Over to Mark Mobius now, Executive Chairman of Templeton Asset Management, joins us live from Japan. Mark, morning. Thank you for joining us. Mark, what's happening out there?
Well, life goes on, as you know. Even with the markets coming down, you can see here in Japan that things are okay. As you know, they've now in the process of recovering from the problems with the nuclear disaster up north. But it seems that everyone is enjoying the summer vacation here, and you see the shopping malls full and people traveling around the country. So even despite this turmoil in the markets, Japan is doing okay.
Mark, how would you describe the situation in the U.S. equities? Because it seems like a double dip is inevitable.
I don't think it's necessarily inevitable, particularly if the Fed starts to stimulate the economy again through more money printing and providing more liquidity to the system. So I don't think it's an inevitable situation. Of course, the market is telling us that we're going to have a slowdown, but whether it's going to be a real depression is questionable.
Mark, do you think we are in a prolonged bear market for equities now? Because normally when global growth contracts, global equities as an asset class, they always underperform.
Well, actually, if you notice what had happened during the subprime, these bear markets tend to be very short in duration. And by the way, a bear market would be defined as a decline of 30% or more. We've already had about 20%. It remains to be seen whether we hold it at this level or around this level with a little bit more of a correction, or whether it goes down more. But despite what happens, the duration of these downturns is quite short. One of the advantages, by the way, of this very high volatility is that prices come down to such a level, such an attractive level so quickly that buyers appear fairly soon.
So at these levels, are Indian markets looking attractive? And in last 48 hours, in last 72 hours, have your fund managers bought Indian stocks?
Yes, we are picking and choosing, of course, the things that we like, and being very cautious, of course. But it is a buying opportunity in a number of areas.
Mark, what would you say about commodities? Is it still time to buy gold and silver, the precious commodity basket?
I would say gold and silver are at pretty high levels at this stage. You may see some more upside, but the percentage change going up is probably going to be limited. You must remember, in all these commodity markets, the volatility is high. So you have to, of course, look at the long-term trend. The long-term trend is up, but the prices will fluctuate very wildly around those trend lines. So you have to be very cautious when these prices are up dramatically over a period of time in a continuous way. Then, of course, there's bound to be corrections along the line.
Mark, once the dust settles down, which are the key markets do you think will emerge as key winners?
Well, all of these major markets, whether it be India, Indonesia, Thailand, China, of course, Russia, of course, was of great interest to us recently, in Brazil, depending on the correction, there was, of course, a need for some of these prices to come down to more reasonable levels. But all of these countries could look quite interesting going forward.
Mark, so because of risk aversion, do you expect EM equities and EM debt now to outperform? Because globally, money will now move out of US treasuries, money will now move out of euro treasuries, and money will also move out from US equities and euro equities.
Yes, people are now beginning to wake up to the reality that many of these emerging countries, in fact, emerging countries in general, have lots of foreign exchange reserves, and they have low debt to GDP levels. The combination of these two elements is very, very important, because it means that these countries can be perceived as being quite safe. And that's why one of the things we've been trying to tell investors is that they must focus on diversification around the world, particularly into emerging markets.
Mark, you manage about $70 billion of dedicated emerging market money. Have you got redemptions in any of your EM funds?
Of course, we have redemptions and subscriptions on a daily basis. The trend recently has been pretty steady. It hasn't been a huge exit by investors as there was during the subprime crisis. Of course, that depends on what will happen in the next few days. It's too early to tell at this stage. But of course, in times like this, there is a tendency for people to want to redeem. I believe, however, lessons were learned during the subprime when people got out and then discovered that the recovery was so fast they didn't have a chance to get in again. So I think that's one thing we have to look at very, very carefully.